Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
Ladies and gentlemen, welcome back to episode 201 of the AJ Brown Show. Today is September 12th. In the thick of things, the markets are back. We're getting volume, we're getting news, we're getting all sorts of stuff. My name is Cyprian Francis, and with me, as always, the main man of the hour, 200 episodes deep, Mr. AJ Brown. AJ, lots of stuff in the market. You know, the people want your insights. Where do you want to begin? I imagine with yesterday's CPI inflation numbers, kind of the talk of the town right now.
Yeah, CPI and PPI a day earlier. So on Wednesday, we got the producers price index, and yesterday we got consumer price index. They didn't actually raise any alarm bells with inflation. Everything came in as expected. Here's the producers price index that I'm looking at on my screen right now. I mean, a lot of people are saying, is the Fed's new target 3% instead of 2%? Because it's like we got down, if you remember, after the pandemic, it was up at like 7%. We got down pretty quickly, but this last percent is just hanging on. And then if you take a look at, of course, the consumer price index, I mean, that came in as expected as well. Nothing surprising. But what surprised people yesterday, not surprised people, but we've been getting a lot of employment news, Sip. Have you heard about this? There was a readjustment of the first 3 months of this year, and it was like significantly down from what was initially calculated.
I mean, I'm hearing this, and my question to you is, throughout your history of looking at these numbers, have we ever been this far off this often than we have now? Because I'm seeing really huge swings.
Yeah, that's a whole different discussion. So that discussion and the scoop is how well are we getting this data, right? The traditional way that we got this data was sending surveys out to individual households. That's for the unemployment information, like the unemployment rate, and sending information out to employers. But the startups and the businesses that are coming on board, they're coming on so strong, so fast, and they have kind of this mentality of like, let's go do business. The last thing they want to be doing is answering a survey. So when you delve into the Bureau of Labor Statistics, like data gathering methods, you find out that, hey, they're not getting the surveys back on time. The surveys are coming back half filled out. And how do you extrapolate like accurate data from that? And, there was actually a commission that was established to kind of revisit this, and they kind of ramped up employment to work on that statistic mechanism. But with all the Doge cuts and things like that, that group was disbanded. That was supposed to address that. And actually, you've heard, there's been a shakeup at the Bureau of Labor Statistics. Their budget has been cut. So as far as the accuracy of the data and the swings of the data, whether the tolerances, I think we're going to, until we address that, it's going to be all over the place, Sip. But I think everybody actually feels it intuitively that the job market is, getting tighter and tighter. And one place that's actually quite easy to get statistics is that weekly unemployment report, right? Because when people come to claim a check from the government, their name is taken, data is logged in the system. The government doesn't just hand out checks. So that unemployment report seems to be, where investors are looking for some of that, tried and true data. and the unemployment report says unemployments are going up. That's what another key piece that caused the market to jump yesterday was that unemployment report. All this news about employment and the labor market not being very, strong right now, that leads the Fed to have to drop interest rates, which is what investors have been wanting. So any bad news when it comes to the employment numbers, investors right now are taking as good news.
Yeah, that was like a very weird phenomenon for me to watch yesterday as this news came out because, like you said, the mandate is 2%. Inflation is at this 2.9, and everyone seems to be starting to accept that. And then the jobless claims came in, and those numbers were pretty outrageous in the sense that, yeah, labor is going down bad fairly quickly.
Mhm.
Technically isn't good for the economy, but from the market's perspective, like you said, what the investors are, guessing now is we're going to get more rate cuts, and so that is good for the economy. And so we hit all-time highs again yesterday, which is one of the, I guess, stagflation continues to be the word that they throw around.
Yeah. And, stagflation would really be more accurate if we were seeing inflation go higher while the labor market shrinks and gets weaker. But, that's kind of why investors were a little bit happy yesterday, is because the inflation seems to be stuck at 3. It's not going up, it's not coming down. But if it stays steady, and you have this other problem of employment, getting weaker, the Fed will turn its attention from trying to get that last mile, that last 1% in inflation down, and turn their attention to the more important thing, which is that employment's getting weaker. And the way to treat that, the pill to give the economy, is to lower rates when the labor market starts to drop. So I've got up on my screen, investor expectations for this next week, the rate point drop. I mean, we're almost at 95%, belief that the Fed is going to drop a quarter point. But what's interesting is if I go now to October, remember October a couple weeks ago, it was like iffy. Will we see a second rate cut in October? And as of today, that's not iffy anymore. Investors are expecting very much, based on the data that they're interpreting, a second rate cut in October. And then again in December, it was kind of like 50-50. Will there be a third rate cut, or could it be just, we kind of ride it? And now, as of today, again, with all this data, with this weakening employment numbers, and with inflation staying steady, higher than the Fed had said, but steady, they're expecting a third rate cut in December as of today. You can see that in my little graph.
And is that kind of the learning from yesterday? Is the confidence in this third rate hike? And I believe bonds, or like the 10-year, was reacting off of this in a positive way, in that we're finally starting to get some of the mortgage rates coming down, and that maybe can settle housing. Did you see any of that spillover?
Yeah. So the bond market has been very active this week, with folks coming in, the rates kind of like ticking down a little bit as, overnight rates are expected to drop. And then even remember, we like to look at that other Fed mechanism for controlling inflation and things like that, which is called quantitative easing and quantitative tightening. Look, the Fed kind of put a pause. In fact, they went back to quantitative easing. If you notice, they started to buy a little bit. Now, that's not unusual. You can see that the Fed, over the last 3 months, they like to do some heavy duty tightening. Then they kind of hold, maybe buy a little bit, let it hold, and then they do another. So like once a month, they kind of, sell a whole tranche of bonds out there, and then they allow the market to digest it, and they do some little tweaks, some corrective tweaks. So we might be, for the last 2 weeks, in that corrective tweak mechanism, but whenever the Fed gets a chance, they do sell more bonds. So with all that said, I think investors are happy for the short term. I don't know. That's been kind of the complaint, the criticism of the US market over all the time. I remember when I was a kid, when, Japan was the big, China was often in secrecy land with their Maoist beliefs back in the 70s and 80s. It was Japan that was the big, trade, you know, uh, antagonist for the US. And the thing that Japan had over the US is they always, when they were thinking about making strategic decisions in their markets, they were thinking like on this 100-year, like we're going to make business decisions today for 100-year goal. Whereas the US market always looking at that, how do I get immediate profits? We're always looking quarter to quarter. So that's always been a criticism of the US market, which is they don't think past the next 3 months. And so you really said it right, Sip, in that, a weakening labor market in the long term isn't the best thing for the US economy. But I mean, if it means that the Fed over the next, 3-4 months is going to be lowering interest rates, investors are happy for the next 3 to 4 months.
Yeah, I feel like that's a very good retail lesson where it's like bad news is good for the market. Let me explain to you
In the
how that.
short term, yeah.
Yeah. All right. So with that being said, 96% confidence that we're going to get a rate cut on,
Wednesday
Wednesday,
next
the
week.
17th. It seems as if the market may have tried to price that in yesterday off of that news. And so I see you pulled up the S&P. What are you seeing? What are you looking at? Because I mean, I'm looking at that doji bar. We are literally at the top of the market while we're, broadcasting live.
Yeah. So today, investors are back to caution. Yesterday, a lot of excitement. You could see it isn't the strongest, right? We get a whole bunch of after hours and pre-session pops, but then you can see that the investors during the actual trading session have been somewhat, either straight keeled or a little bit negative. You can see here on the last week, we saw that everybody was excited, and then by the end of the day, they were maybe not so excited. And then on Monday, blase. Tuesday, a little bit up. Wednesday, the pre-session traders jumped up, and then the market traders, took profits. Then we saw, some excitement on the steady inflation and the employment numbers being a little bit on the weak side. And then today it's blasé again. So the market hasn't been so committal, but last week we were talking about swing trades with, our guest, our longtime student, Jasmine, and all the swing trades, were popping, especially yesterday. We were worried, and I'm still worried, to be honest with everybody. I'm still worried about those swing trades turning into reversals, but we got a bunch of confirmations and a bunch of entries yesterday on those swing trades. So now the key is to make sure that we get our correct exits on that.
And so with the Fed on Wednesday, looking at next week's activity, I mean, we could, unless Chairman Powell comes out and says something, or I did see, and you tell me what you think, I did see people tweeting 50 basis point cut. I mean, that would add a shock to the market, would it not?
It would. I think that although that's tweeting is coming out, this chair president is a little bit too, there'd have to be some major emergencies. Now, I've been proven wrong before, but I don't see a 50 basis point cut, especially with the uncertainty still around that whole tariff discussion. I actually was watching on Fox News this morning as the Fed president, as our president, President Trump was on live this morning at Trump on Fox, and I had heard him kind of address the whole, too late Powell is the nickname that he's given to Jerome. But I don't see. He also addressed that the tariffs are in the court system now, and he was like, I don't want to give all that money back. The economy is doing really well, um, and I think it might be also how you measure whether the economy is doing well. But to his measurements, he's saying that the economy is doing well and that it doesn't make sense to give all that money back. And he's hoping the Supreme Court goes his way on tariffs. But with all that uncertainty about all these things reckoning with these, untested fiscal policies, I think that Jerome's going to play it, quite cautiously. I don't think you're going to see a half-point rate cut.
Yeah, and especially if he might not be around for too much longer, which seems like probably is going to be the case.
I mean, he's up in April, and I think as much as there's rhetoric, I don't, especially now that the court said that one Fed chief that Trump tried to fire still gets to keep her job. I think that the court system and everybody is saying, okay, you're crossing a line if you try to control the Fed, right? The Fed is one of those things. And I think even the Supreme Court, in one of their past decisions where they handed a win to Trump, they actually documented out. They said, this one's okay, but there's some areas. They said this one's okay because it's not in one of these critical areas. And one of those critical areas was the FOMC and the Fed, the Federal Reserve. So I think that there's all these little areas that are pushing back on Trump. And if, a lot of people say that he's brazen, but one thing he is very good at is testing the waters and pulling back when he gets pushback, when he doesn't get favorable, likes. And one of those things, I think, across the board is the Fed. They're saying don't touch the Fed. So I do see him when it's legal, assigning a new Fed president next April or May. But I've noticed he's quieted down on the rhetoric. Besides calling the guy Too Late Powell, he's quieted down a little bit on the rhetoric of I'm going to fire Powell, especially since he tried to fire one of Powell's underlings, and the court was like, no.
I also agree with that approach more so than the traditional approach, because it seems more of the innovator, the entrepreneur mindset, where it's like, I think we should do this. I'm going to go and try and do it. And then fortunately we have a
good test
democracy and good guardrails in place to be like, okay, well, we will discuss it and we'll come back with our answer and then we'll move on and continue to conduct business. So
yeah,
in a way that's more refreshing than his first term, it feels like, and just governance in general, and lowering rates, I think, is for the better, but inflate, that's why it was created, to kind of help manage these narratives.
And if you drop rates by a half point, surprisingly, right, that could stoke that problem with stagflation, right? Because that could be the spur to get that inflation to go back up. So I think the Fed's going to be quite cautious. Stagflation is not a good thing. I lived through it through my childhood. So hopefully that's not something we're going to bring up.
That's a lot of the comps I'm seeing is to the 70s of where we are with the economy.
It wasn't a good time.
I do have a question in terms of the employment, right? Because
yeah.
I feel like the employment situation is different than maybe it has been, the last 10, 20, 30, 40 years, because of automation and AI having such a larger impact on replacing entry-level jobs. And so I wonder if that component is having a larger impact on employment than like the traditional tools of things. Because I mean, I saw a crazy stat of like 16 to 24-year-olds having the highest unemployment rate in like 30 years. And so, do you see that as being kind of one of those industrial revolution shifts, like where we have all these tools and we have to reinvent what kind of work we kind of have, and things are being replaced and it's cheaper and these big companies are making more money. But it's like, what are your thoughts on all that?
Yeah, change is abroad. I mean, this is another revolution. I mean, even when I was a kid, when car factories were going robotic instead of having, all these people on an assembly line, there's always these, changes in technology, and it causes a change in the labor force, and people have to adjust. Anybody who's left behind, you know, that's the key to the game. People like stability, but at the same time, if you don't embrace the technology and you reject it, you're ultimately going to get run over. But Liza and I went over to a different part of Washington D.C. We went to some sort of financial get together on Wednesday, and we drove through what's called the Dulles Corridor, which is basically Data Central Alley. And I could not believe the amount, these data centers are just incredible. And there's got to be people who maintain them, people who build them. So, in this transition to this next growth, I mean, it's just, can you be flexible enough to take these jobs? You always hear about certain jobs going away. I mean, I remember hearing about when the electric light bulb came around. All those folks that used to go around the big cities and light the gas lights at night, no longer had a job. So, you change, and that's just, you got to embrace change.
Yeah, I had a big tweet argument with a girl who I went to high school with, who's a teacher, who's complaining about waitresses having to work too many hours and stuff. And I was like, those are going to be replaced by robots someday, right? Like, it's like, that. And it was like not accepting it. I'm like, well, if we have self-driving cars, which is a pretty dangerous thing that a robot is doing, they're going to start to replace all these, pretty safe things that you just have to follow orders and do things. So I do think the world and the younger generation should start to kind of shift their mindset for that. But I worry whether these numbers are a little kind of convoluted because of these changes happening so quick. And while we're having this discussion, two big storylines this week were Oracle, right? Oracle came out with earnings that crushed it a lot of on this new AI data center chatter. And what, Larry Ellison passed Elon Musk as the richest person on earth. I think he made like $100 billion in one day just off of that. And then the other big one was the Apple product release, which is always an exciting thing because Apple is a $3 trillion company. It's in these indexes. Did you catch any of those news headlines?
Yeah, absolutely. That's data. So Oracle is, the database solution. They always have been. As data gets more and more important, and the storing of data and the sorting of data, that's what AI is, right? AI is the sucking in of data and then kind of being able to give you the cliff notes of all this data, but it's all about data management. So it doesn't surprise me at all that Oracle, and of course then Apple, who doesn't have a little bit of Apple in their life? Even people who have Android are also Apple users. Somehow there's Apple everywhere. So it just makes sense that these companies are, lighting up the markets, right? The question is are we going to have to get to a point of like trust busting, like Teddy Roosevelt did about 120 years ago, when like the Andrew Carnegies and the robber barons out there were, accumulating too much wealth in one area? Because that's something that's quite interesting to look at as well. All the small companies that are growing right now, because there's a lot of small business activity, but they're picking up the crumbs of these big companies. We know that because there's the FANG stocks, right? And we know that the S&P 500 is heavily weighted towards the S&P 100 side. And so the question is do we need to have a little bit more competition? Do we need to be able to spread out that wealth? I mean, those are some questions that we have to address as a society.
Yeah, and I think that was a debate last week when the Chrome and Google lawsuit was going on. I don't know if you followed any of that, where they were trying to uh, make Google spin off Chrome because, having your own browser and all these tools, and they ended up winning the case, not having to sell off Chrome, which I guess would be part of the trust busting
Well,
attempts.
I don't know if you remember, but that was what got Microsoft, right? Microsoft, what was it, like 25 years ago, 20 years ago, when Microsoft was, and they had to spin off their Office and make sure it was a separate thing, spin off the Explorer at that time, and now it's called Edge. It was the browser, right? So the fact that you could tell that the climate has changed a little bit because Chrome was allowed to stay as part of the Google product line and not be separated out the way that Microsoft was attacked, at the end of the 90s, beginning of the 2000s.
Yeah, and then the Apple stuff. I don't know if you the Apple like present isn't how it used to be back in the day when Steve Jobs would go up there and give you the confidence and the vision. Now it's this highly produced thing where it's like drone cameras coming in, music and stuff. I don't know. Did you catch any of the Apple this week?
And it's funny that you say that because I used to get very excited every year to see what the new innovations are. And, it's become a mature products, right? And you don't really see what you see with Apple versus in the Steve Jobs days, when they came out with first the iPod. What? Having a small hard disk with all your music on it, to having the iPhone, right? Now it's like slight increments of features and not really a new technology. And you saw Apple pull out of the iCar. They're not going to pursue having an Apple Car anymore. So I wonder if that little spark within Apple has, they're not going to create any brand new market changing products. But yeah, so I didn't catch it because it's just not interesting like it was.
Well, fortunately, we have a new segment on our show. What title were we going with, AJ?
The morning sip.
Oh, the morning sip. Right, right,
Should we
right. So
take a morning sip right
let's.
now?
Well, I think the morning sip this week was the Apple stuff because you didn't get it, you didn't catch it, and maybe some of our viewers didn't. But I got working with the chat to give me some highlights of the technology. And so I think this week's morning sip is going to be what is Apple? What has Apple unveiled, and what new technology have they released? And so, not surprising to anyone, a new iPhone 17. Like it's not even named anything different. They're just adding a new number on top of it.
Yeah.
But the nuance with the new Apple is they have this new Air version, which is supposed to be very skinny, right? And so I think they're packing more of the technology into the hardware. And so, like you said, everyone's gonna have an iPhone, whether it's the super basic one. Apple makes a lot of money just on their software and their apps, and 30% of every app transaction and things like that. I mean, that's a good margin there. So that was the big takeaway, was a slimmer iPhone, probably a little bit cheaper, better battery. Nothing surprising there. That's kind of been the case every time they give this presentation. There's a bunch of new Apple Watch updates. I don't know if you're an Apple Watch user, but one of the new features was collecting your heart rate, right?
Mm-hmm.
So there's some innovative features to integrate into some of the health apps, which was kind of interesting. And then
Wearables.
and then some upgrades to the AirPods Pro. However, the big takeaway from the AirPods Pro update was live translations in
Mm-hmm.
your AirPods, but like in a good way where it's like it knows to translate, and so it lowers and it increases the volume so you can actually kind of have a conversation, which is pretty cool. I'm wearing
See,
the Meta. I'm wearing the Meta, which has a translate version of these. I haven't really explored it, but that's good for humanity. We're going to be able to communicate a little bit more efficiently.
Yeah. The fact that these things can even do that in real time and you don't need to have an interpreter, that's pretty amazing. I have those meta glasses. I better check into that translation. That's very cool.
Well, it's only got like 4 languages right now. I think like Spanish, French, maybe I don't know something else. And then some software stuff, but nothing exciting coming out of the Apple stuff. Although I think Apple shareholders, investors were happy. Apple, I think, has been doing pretty well all week. Not that it's like anything surprising, but you're right. We're missing that next level of technology. Although they did mention something about this smart glass, which I don't know how much smarter it can be than what we have now. It's just maybe like a little bit more flexible or whatnot. I do see the double phones coming out of China that are popular, the ones that fold. So
Yeah,
Apple
yeah, yeah.
hasn't caught up to that yet. And then there has been some AI chatter on Apple creating an AI product and working with some of these GPTs.
But don't you think that Apple's a little bit behind the game? I mean, you've got Chat, you've got Gemini, you've got what's the one from Tesla, Grok?
Grok. Yeah.
So if they come out with one, they're kind of it's just a Me Too product. I'm thinking as you're talking about Apple, and yes, one of their biggest money makers is the commission that they make off of apps being, sold through their app store and subscriptions being sold through their app store. And it makes me think back to General Electric, right? General Electric, if back in their heyday, they made everything from turbines to light bulbs to they were a product, a hardware maker. And if you think about Apple, where their engineers have their expertise is making these absolutely beautiful pieces of hardware that are not just functional but elegant, right? And well made. Like you mentioned, the new iPhone is going to be extra thin, right? The hardware engineers were like given the carte blanche to go crazy. But where Apple's making a lot of their money is off of collecting commissions, and where GE just recently had a big breakup because they got to a point where it didn't even make sense with what they were doing. Where they started to make the most money was in GE financing, right? The banking, and it wasn't on selling the hardware. And I think about one other case, which is Hewlett Packard, right? Hewlett Packard in their heyday was not just selling printers and things like that, or creating laser and inkjet technology. They were like in test and measurement. They were all over the place. And then it turned out that the best place that they made their money was not actually selling that amazing hardware, but was on paper and ink. And after a while, when you have all of a sudden you find these ways to make money, but it's not your core expertise, the companies soon become bloated, and then they start to wane and they have to recreate themselves again. I bring up Microsoft is still one of the biggest players out there, even though they had to recreate themselves after getting knocked down. And they've gone through different testings of should we be a consumer company and make like Surface Pros or whatever that Microsoft line of products was. And you'll notice the Microsoft stores are out of the malls because they're like, that's not our expertise. And they went and they partnered with Chat, and they're adding some of their quantitative computing to, AI, which is going to. So, I look at these companies and I see Apple in this mature state, and unless they do something to recreate themselves, I almost feel like they're on the path in the next 10 to 15 years to kind of like fizzle out. I know people are like, what? What's going to happen to my iPhone? Well, what happened to your LaserJet printer? Soon we're going to have our iPhones built into our brains with little chip implants, and we won't need a smartphone anymore. So I don't know.
Yeah, I do. I do like how they have created this infrastructure for other businesses to live on. And like I think of Uber, for example. Like Uber wouldn't exist if there weren't iPhones to connect drivers and there's a lot of cases of where there's really robust businesses that are built on the infrastructure. And within more people will have access to the infrastructure with cheaper hardware, access to the infrastructure. So, Apple does, help a lot of other businesses with just their highways for us to make our
Absolutely.
FaceTime, send our messages, and just even the ability to develop apps and get them up to the stores is they have it streamlined. So we'll keep an eye on Apple. We like technology, so that's why we bring it up and that's why we pay attention. And they
That
are
was a good
big
morning sip.
they are a big component in the indexes and stuff. And so if people are happy with Apple, it helps. If they're not, you feel it. So
Yeah.
there's our first morning sip, a little bit of review of the Apple. AJ, we are gonna get into some goodies, we've been
Absolutely.
speculating for a while here, but we're gonna take a short break. We're gonna go over our pick of the week. We'll go over our speed round, and we'll take a look at some of the names that maybe you and the team in the back end, the members, are looking at some setups. So sit tight, folks. If you have any names that you want AJ to run through, throw them in the chat. If you have any questions, throw it in the chat. Go grab some coffee, take a break. We'll be back in a few seconds to talk about some opportunities. So sit tight, folks.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
Sip, sip, sip. Before we go on with, my pick of the week, let's talk VIX for a second.
Yeah, I'm always looking at that thing like we are this certain of the world in the economy.
Yeah. Well, let me say my VIX trade expired last Friday, and again it was break even. Now that's not a bad thing. That means that the proverbial poop did not hit the fan. And if you guys remember how we structure the VIX trade, when I break even, I do make a small amount, right? So it's not for naught. But the main reason behind the VIX hedging trade, and it's a hedging trade, is to protect your portfolio. I put anywhere from 10 to 20% of my portfolio every time I launch the VIX trade. And it's if the proverbial poop hits the fan and some of your other trades start to get, the risk situation starts to, play out, this VIX trade covers all those losses probably and some. So I just wanted to let everybody see I've got the VIX right up. Like I said, it broke even. I'm looking for the next entry point for putting on the next VIX trade, usually 2 to 3 weeks out. And so I'm waiting for a bottom. And I wanted to let people know if you're using our indicators or you're using an indicator, I like using the fast MACD to tell me. And because it is the VIX, I wind up defaulting to calculating the fast MACD on the closing price. So I wanted to let you know that I'm waiting for my little blue arrow to appear. Let me make sure I turn on the indicator. I reconfigured it and I didn't put it on. So I'm waiting for my next little light blue indicator to appear. And I'm an end of day trader, so I'm not going to be looking during the day. But if I get that little blue arrow in the evening, then the next trading day I'll look for follow through and place that, double vertical in order to make it happen.
Yeah, I feel like this is a great time to keep this VIX on the hot list, the trigger ready to get your signal. Just because at the highs, that's kind of like the level, right? It's like if we pull back, this VIX is popping,
Yeah.
and that white line is something that I always look at, right? And I mean, we're under 15. I'm always like, wow, that's like a very optimistic market. So we'll keep an eye on the VIX there.
Yeah.
All right, your pick of the week. Well, actually,
Yeah.
before we go into your pick of the week, we had we had Jasmine on last week, and we did go over something that she was looking at. I see that it's on our speed round, and
Yeah, one
Carol
of our
out of
one
out of Florida.
Carol followed it on Generac, so we'll visit Generac again.
Yeah, so let's start with that before we go into
Okay.
your pick of the week. Let's see what because we had a nice little overview last week, and did we get the follow through?
We did. So for my stocks, like a Generac or even my ETFs, where I do have a volume measurement, I do like to use the MACD, the fast MACD calculated on VWAP. But we were talking about a swing trade. So I'm going to actually add in my confirming indicator again. I like kind of putting these on my chart. And this is what I use when I'm doing a swing trade. This is what I use for that confirming indicator. A lot of people asked me last week. I like to use a close above the 7-day simple moving average. So, how do you program that in? Everybody pay attention. It's a moving average crossing if you think about it, right? The closing price is actually just a 1-day moving average. And if you think about a 1-day moving average and how it's calculated, it doesn't matter whether it's simple, exponential, weighted, or any of these, because with 1 day, none of these act. So you could set it to whatever you want. I'm setting it to simple just because, um, I like to keep consistency. But when you have this set to one, it doesn't matter because it's just one, right? So it means the closing price. So I like to do that. And then the 7-day, you just bump this up to 7, keep it simple, and click OK. And now, there we go. This is our confirming indicator. And you can see that we got it um, on Friday of last week. So let's zoom in here. Here's Friday of no Monday. I'm sorry, Monday of this week. We did not get any follow through on Tuesday, but on Wednesday and for sure yesterday we got our follow through to jump into that trade. So no, if you jumped in when the stock was around 183, 184, and now I guess maybe Carol's question is what do I do now, especially with what I said a few minutes ago, Sip, where I said, hey, even though we got our entries, yesterday and on Wednesday for these swing trades, I'm still a little bit hesitant. Doesn't mean I didn't jump in. It just means that, I'm going to be quite diligent on my exits.
Great. So, I mean, this is a wonderful example of your students taking the learnings, applying it, finding some names, coming back, setting up the trade, and I guess we're kind of in wait and see unless we got options expirations coming up.
Well, and here's to go down that whole conversation of exits, and this is for you, Carol, and Jasmine, if you jumped in there, all of you who are listening that were following the Generac. So a lot of times with these swing trades, we will just look for the technical exit. What does that mean? That means getting the same signal. So having that 1-day or that close go below the 7-day and then give you subsequent day follow through, right? That's typically the signal, the confirming indicator that gets us into the trade is the one that gets us out of the trade. You may actually consider, in addition or instead of, a trailing stop, whether that trailing stop kicks in, right now, or whether you accrue some profits and then switch over from using the technical exit to the trailing stop. That's kind of how you deal with this more uncertainty, is you put some sort of trailing stop in place that basically says if the symbol continues to go in your direction, great, but the minute it gives any signal of a reversal, that's not necessarily your technical signal, but the trailing stop could be a little bit more reactive. And so that's the answer. The answer is if you use a trailing stop, consider using it earlier, and or just start using it right from the get-go.
Awesome. Love seeing the pros coming up from the names that we get from our audience members. So that's
Give me a second,
Generac.
Sip. I'm going to put my phone on. People are calling me, and I'm going to put it on quiet here because I'm here in the hotel and people are calling me as I'm doing the show. So I just put it on quiet.
No worries from our end. It was
Doing
a subtle
this live,
sound, but
man.
you're just you're a popular guy, AJ. That's the word on the street. And the word on the street is, what are you looking at this week? What do you like? And so your pick of the week this week is a name that I'm not too familiar with. I had to go over here and Google it, but NOV Inc., ticker symbol NOV, which is an oil and gas drilling production operator, oil field service, supply chain, something in the oil space. So what do you know?
Boring.
What do you like?
So, swing trade's great, and there's so many of them popping, but I'm still, conservative me, person who wants to make sure I still have the income coming in. I'm still looking and having a portion of my portfolio, in fact, a bigger portion than even last week, in premium selling positions. And the sectors that I'm kind of focusing on is things related with the energy, and even some of the old technologies like the oil that doesn't seem to be going away anytime soon, and then also financials. So NOV is supporting kind of the whole oil drilling and all of that kind of technology. And you can see by looking at their chart, boring, right? Sideways channeling. And that's what us premium sellers love, right? This is like the symbols that are going to continue to put the meals on our table as we take a portion of our portfolio and go after the high flyers, right? So keep the income coming in. And this is in this sideways channeling pattern. It's cheap, it's inexpensive. If we take a look at the options chain, and I like using our options lookup tool that anybody can get access to. So if I go ahead and take a look at NOV, maybe look at a couple of extra strike prices, throw that in there. There it is. And I take a look, for instance, at January or February options, you'll notice that they trade every dollar. So you've got the granularity to be able to put your strategies into place. And they've got pretty good liquidity. So the option chain is there for us. It's sideways channeling. It's been trying to find a top, but every time it finds a top, we don't get the follow through signal. So we're waiting. We may get it. I already see that we're getting an end of day signal today. In fact, I'm going to switch over for this type of trading. I'm going to go back to my fast MACD. So I'm waiting for another one of these magenta signals. Maybe I'll get it today at the end of today, but I'm waiting for that top to come. If I get that top, one thing I notice, here's a caveat with NOV, and that is they don't really have options far enough out for us to have option substitutes. So you're going to have to use the stock, and this thing's cheap enough that that's not a problem, right? It's not going to break your bank. So you're either going to short some stock or you're going to go long some stock. When you're at a top, you're going to want to short some stock if you've got a margin account to do that. Otherwise, if you're dealing with a strictly cash account, then you're just going to wait and you're going to keep this on your hot list until it forms a bottom. But I'm waiting for that top to form, SIP, so that I can short some of this stock. And then every time it swings down between $11 and $12, I'll sell put premium, I'll buy protective calls, and I'll be just in Fat City. But that's kind of what I'm doing right now. If you're already in a position, this is the time when you're looking for a top that you're going to want to be selling calls and buying puts. When you're at a bottom, what you're trying to do is sell puts, buy calls. So that's, this is one of those stocks that's just going to keep paying month in and month out as we, take a portion of our portfolio and pursue some of those directional trades. So I can't emphasize enough that you need to have your money makers working in the background, and NOV is one of those tickers.
Yeah, and I love when we bring up these little $10 to $15 priced stocks, because you're right. You have a little
Anybody
bit
can do it.
more flexibility than, like the Generac at 190 something. So we'll keep an eye on that. NOV Inc. as AJ's pick of the week. We've got two other names. You did mention that you're liking financials. So Bill out of Philadelphia, Pennsylvania, might be liking financials too. Wants to know if there's a play in ING Group, ticker symbol ING.
Look at that. Absolute beautiful swing trading opportunity. Bill, did you get into this swing trade? Look, we got that signal, Sip. Let's zoom in a little bit. This is almost textbook. Let me try that again. There we go. This is almost textbook entry signal. We probably got an entry 24.50. We're already up at 25.50, 25 and a quarter. And if you're using options the way that we talk about using options on these swing trades, you're probably up 20%, 25% already in just the last 4 days, 5 days. The question I bet you're asking, Bill, is the same question I think Carol was asking, is what do we do now? What kind of exit are you looking for? So again, I would, if you're jumping in on a signal, whatever your signal is, we've got the fast MACD up. If you're doing the more traditional swing trading, the close above the 7-day like that, you had your signal here. You had kind of a question mark here, but no follow through. So wait for your technical signal for your exit, and or we use a trailing stop, right? And so on this particular one, I would set a goal of profit accumulation, right? Maybe get to the point where you have up to 25, 30, maybe even 50% profit on your initial investment, and switch over to your trailing stop, maybe a tighter trailing stop, maybe a volatility optimized trailing stop. They have those trailing stops like the chandelier exit that, builds into its stop, whether you're having a volatile day or not, so you don't get stopped out inadvertently. I would do one of those, but let yourself accrue a certain amount of profit first. I feel comfortable enough in Ing's run, especially with the potential for the interest rate drop. All the financials are going to pop even higher. So don't be too quick to exit, but be ready with your technical stop and back it up with a trailing stop once you hit a certain profit target.
That's definitely what I was thinking. The financials tend to benefit from, those rate cuts. And I guess if you would have got in at that lower signal there, I mean, that's a beautiful swing setup. So keep an eye on that, Bill.
I'm guessing Bill did. We featured this.
He did.
I can tell because I look at my drawings. I think we featured this about a month or so ago. And so if you watch, I see that it was actually swinging before. Here's the swing trade. Get in around with follow through somewhere around 23.50, 23.75. Get out at 25. Again, if you're using options, and there's a whole technology that we talk about in my programs about whether you use strict stock replacements where you have options trading at parity, or whether you trade some out of the money options, which could really benefit you. So, it's more than this show, could do in the hour that we have. But if you're interested in this stuff, you definitely should look into some of our programs on swing trading, because I can teach you a whole bunch of cool stuff to do with some of these movements that are in the underlying stock.
Yeah, and any of the new user or new viewers out there, you can see the signal on that indicator looking pretty clean here on this stock. So if you haven't gotten access to that, we're giving that bad boy away for free. So just use the link in the chat, head on over there, sign up, get that loaded, and you'll start to get a little bit more clarity on some of these setups.
I wonder, what's really interesting, Sip, is, and I just thought of this real live right now. We put in the flexibility to calculate what price. I wonder if you get a more accurate, I'm going to have to do some research, but to get a more accurate signal. Look, as soon as I calculate this on VWAP instead of volume weighted average price instead of close, a lot of those muddied signals go away. So maybe if you're using a close crossing the 7-day, you calculate that on the volume weighted average price, which is what we've started to do about a year ago on the Fast MACD to kind of clean up and make sure that the signal is more reliable. Look, I got rid of all that, like, you know, conflicting signals. Maybe that's a hot tip for you guys. I'm going to start playing around with that on my swing trades.
Yeah, we'll definitely let the team know on that. All right, third and final name, Christy out of Columbia, South Carolina. Another name that we've looked at on the show fairly often, CMEX, ticker symbol CX, and I forget what they do. Cement?
Mm-hmm.
Boring.
Well, yeah, but still boring, but appreciating. I love that it's in the $1 range. So this isn't necessarily a premium selling. This is one that's a trend follower. And yeah, we did look at it before. Here's something interesting. For those of you that follow me or have taken my short courses on how to do retracement analysis, you'll notice that the retracement analysis gave us a one cycle. It never even matured kind of deviation. And so when we get that, like I got right here, we generally say that that's just a fluke. And so you'll notice that I took my best fit trend line and went all the way through that and just ignored that unmature trend that appeared right here. So yeah, you've got your trend. Let's go ahead and play this out a little bit. Let's add a couple of indicators. Let's verify that trend with a simple moving average. And I like using a 30 or a 40, depending on what we're doing here. I'm going to use a 30 today. And let's see what that does. So you can see that my 30-day simple moving average is just in the last month becoming parallel with my best fit trend line. That usually means that, you know, looking for swing trades is the right thing to do. So now you're going to need a leading indicator to tell you when the pullback is enough to swing it. And so that is one of my favorite is Larry Williams's Williams percent R. And here's a little trick for you guys. For some reason, all the charting companies they're probably catering to the day traders out there. They set this to 10. Larry Williams said, unless you're a day trader, always set it to 14. And so I would say stick with the 14. Let's go for some extreme boundaries of oversold and overbought. And what you're going to do basically is, now that we know that we've got the good trend, you're going to watch for this Williams percent R to dip all the way down below this yellow line here at 90, negative 90. And when it does that, then look for your green arrow, the one crossing the 7. I'd calculate it on VWAP instead of on close. And that's when you trade this thing. So this is a great setup. We just have to wait for the indicators to come in alignment, and then boom, trade that. Trade that with either a stock replacement option, or get very elegant and use an out of the money, 3 to 6 month out option that you can really trade that parabola. There's so much good you could do with CMEX. I'm really excited you brought that back up again.
Yeah, two pretty boring names with some nice prices. We're going to add that to the watch list, and we'll keep an eye on that. So thank you for that, Christy. Looks like the markets are kind of mixed right now heading into Friday, coming off of those big pops, all-time highs yesterday. Heading into the weekend, AJ, your thoughts? What are you looking at? What are you expecting? It is September. Everyone's back from vacation, so are we going to start to get some volatility here the next couple of weeks and the rest of the month?
So here's the scoop. Next week is the week before options expiration. So I'm already turning my attention, if you can believe it, to October options. And I'm starting to really find those candidates out there that are going to be good premium sellers. Don't get me wrong. I'm still following these swing trades. I'm still employing all those, gotchas. I'm planning both ways. In other words, any swing trade that I've got on the books, I'm looking also having a plan B for a trend reversal. I'm thinking about my VIX trade. When am I going to get my next chance to put the VIX hedging trade on? I've got some money set aside in cash ready to go into that. But for this weekend, I'm actually going to be researching all sorts of premium trades. So for those of you that have swayed from the premium trades, I think for the rest of 2025, you should come back to the light, right? You should really think about what kind of premium trades I could be putting on because, you know, it's very easy to make money when the market's going up, swing trading, trend trading. But it's also very easy the minute that the bears start to jump out the window for you to lose all those gains. And if you don't have, number one, exit strategies in place, number two, plan Bs in place to trade the trend reversals, and number three, a whole bunch of premium selling trades in your portfolio that aren't affected by this kind of stuff, you're just setting yourself up for some disappointment. This is the time when you start to see those investors, those traders who came in and they're all excited and they're all like, hey, the market's not going to drop. That's when they get washed out, right? And then you talk to them 3 years later and you're like, I got washed out at the end of 2025 and I never went back to trading. I went and started bussing tables again because it didn't work for me. So I don't want that to happen. Now's the time, and this weekend specifically, start looking for some premium trades in addition to all the other defensive moves you're going to make.
And if that's something new to you or something you want a bit of a recap on, AJ's got a wonderful free workshop that'll give you those 4 basic premium selling strategies to start to implement that in your portfolio. What I just pulled up is AJ's quick links page. This link is in the chat, also in the scroll bar. This has got all of AJ's goodies. We've got our social links. We've got that free indicator suite. We've got some other freebies. We've got the workshop. We've got information on joining the Trading Trainer program. We've got coaching. So head on over there, sign up for anything that is of interest. While you're there, hit that like, hit that follow, hit that subscribe button. 200 episodes, guys. We've been going hard for you guys, getting you the content, and the feedback is good week to week. We're finding some great opportunities. So continue to join us. We appreciate it. We'd love to see some of you in our mentoring sessions and in some of our weekly mastermind calls. So hopefully we can convert you into a more engaged customer on the back end. You'll get some more goodies there. But if we see you here on the show, that's plenty. We appreciate it. AJ,
I'm totally being distracted. I got to tell everybody, I'm in Asheville, North Carolina, right? And I'm looking right out the window. I'm on the 13th floor of this hotel, and I'm looking at the Smoky Mountains. And so for those of you that are in these parts, Western North Carolina, Eastern Tennessee, man, you got some beautiful, beautiful scenery. I'm so stoked, and I'm so stoked to go explore Asheville this afternoon. So
yeah, you got some of those fall vibes.
I've got some breweries to visit. Are you kidding me?
That's right. AJ's closing down the screens. He's waiting for the close numbers to come in. He might take a gander this week, but he's definitely not sweating it out in front of the screens like some of you or some of us or some of the people out there. It's
all about living life, right? It's all about this trading thing is not supposed to be your main focus. It's supposed to be something that you run in the background. You run when the sun goes down and you're getting tucked into bed. Just like how you brush your teeth before bed, you check into your charts before bed, and you let this thing run. The reason why trading is a means to an end, it's not the end. So I just want to emphasize the reason why, I realized I left my last day job 20 years ago in August 31st of 2005, right? And the reason was so that I could just go and do stuff like I'm doing today and explore, new cities and just have a blast so that I didn't have to worry about making ends meet. So hopefully that's your focus. Your focus is how can I, free up it's all about freedom, right? Time freedom, money freedom, and just being able to live life. So that's what I'm going to go do today, Sib.
Yeah, well, warning to the Asheville breweries, AJ's on his way. You guys need to load up the coffers because he's going to be chilling.
Yeah.
All right, AJ, thank you for your time, setting us up for the weekend, setting us up for next week. Thank you to the lovely viewers for joining us. We truly do appreciate it. As always, if you have any questions, throw it in the chat, send us a DM. Head on over to tradingtrainer.com, hit that support button, and someone will get back to you. Otherwise, stay safe, everyone. Have a wonderful weekend, and we'll see you guys next week.
Take care, everybody.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content.